Yes, my people, man, I'm back again. I feel like it's been a while, man. I feel like it's been a while. I ain't made a video in a minute, but it was my birthday like last week, so yeah, I ain't really been able to. I ain't really, well, not I ain't been able to, but I feel like I needed a break, man. Come on, man, it's my birthday, man. Cut a brother some slack. But yeah, man, we're back again. Uh, in this video, I'm just gonna do a quick. I took a trade today, and I'm just gonna do a quick run through on that, on why I decided to take that trade, and then I'm gonna go through what I feel like is gonna happen throughout the rest of the week. And yeah, man, let's get into it. So I took a trade yesterday on the euro. I lost that, and then I took one today on the pound, and yeah, that was a good trade as well. Well, that was a good trade, sorry, not as well. So on the EU one, do you know what? In general, I should have never taken this. I went against my rules. There was no red folder news, so it was bound to be a choppy day. So I even labeled it here low probability, but I still took a gamble. I thought the setup was a good setup, but yeah, I tried to buy from here to try and reach for the previous day's high and Asia's highs as well. But mate, as soon as I took a buy position, mate, I got fucking slaughtered. So yeah, man, I wasn't proud of that. But today, um, we had a bag of red folder news, or a bag of major news events. One of the big ones as well, CPI, which you don't trade until after, or until post CPI. So when the news drops, then you trade after that. So my draw on liquidity, where I wanted price to go, was sell side liquidity below old weekly lows, which I'll show you on the screenshots below. So because I was targeting sell side, my daily bias was bearish, so I was looking for short positions only. I said it was high probability, but only after CPI news release. I didn't make any mistakes today, and then I wrote NA because yeah, there was no mistakes, so there was no improvements that can be made. Some of my mistakes don't repeat because I didn't make any. So moving on, this is a screenshot of the weekly time frame. I'm gonna make this bigger. So this is a screenshot of the weekly time frame. So here I wrote in the caption, although we got a close below the mean threshold of the order block. So the mean threshold is the midpoint of the order block. So if you look at my previous videos on YouTube, I got a video on there about order blocks. Go see what that is. I go into depth about what an order block is. So yeah, we got a close below that. So when that normally happens, you normally look on lower time frames to see if you could target sell side liquidity, because that signals weakness in the market because that's basically the last line of defense of an order block. Once it closes below the midpoint of it, you'd look to target sell side liquidity, which forms the order block. So I was still weary about it, because what could have happened is price could have just wicked lower and then moved higher. So I was still weary about it. So yeah, on the lower time frames, it would show what price is likely to do. So moving over to the daily time frame, as you can see here in the caption I wrote, however, on the daily time frame, order flow is bearish. The reason why it's bearish is because bullish PD arrays, so fair value gaps. You've got a fair value gap here. Again, in my previous videos, I got a video on fair value gaps. I go into depth about that on that video, so go watch that as well. Got a fair value gap. Price went into that, rebalanced it, and then moved higher, but then price disrespected it with this huge move to the downside. So PD arrays that are sending price higher are now getting disrespected, and then PD arrays that are forming for price to move lower are getting respected. So that means that order flow has switched to bearish, which has sent price lower to the downside. We have another order block here that price disrespected. So Monday's candle displaced through the order block, turning it into an inversion order block. So now it's an inversion order block. So it's not an order block anymore to send price higher. It's an inversion. So price has now gone into that order block, tested it, or inversion order block, sorry, tested it, and now it's moving lower to our intended targets that I said on the weekly time frame. Because last week closed below the midpoint, and then the daily time frame, remember I said on the lower time frames that would show where price is likely to go. On the lower time frames, now the order flow is bearish. That's a signal that, okay, on the lower time frames, price is wanting to go lower to possibly target that sell side liquidity, which it is. So it's tested the inversion order block, and now it's sending price lower to the downside. So yeah, now it's being retested and sending price lower to reach for sell side liquidity below old lows. Now on the 4-hour time frame, I wrote in the caption, got a huge displacement towards my drawn liquidity after previous 4-hour candles swept previous candles higher, I was meant to write, and then closed within its range, signaling a reversal. I think I could change that now. Previous candles higher, and then closed within its range, signaling a reversal. So what I mean by that is this candle here, it moved higher, touched the inversion order blocks higher, and then it moved back lower and closed below this candle's high. So it swept this candle's high and then closed below it. So that's signaling a reversal to the downside, which sent price lower to the downside, reaching towards that sell side liquidity below the weekly lows. Moving lower to the 1-hour time frame now. As you can see here, in that inversion order block, I've set out quadrants marking out that order block. So in another video in the future, I'll explain what quadrants are. So as you can see here, when price went back into that area, you could see that price is closing below that 50% of the order block, of the inversion order block. So when you see price closing below that 50% area, that means price is having a tough time moving higher. It doesn't want to go higher. It's closing below it, so it's signaling a bearish momentum or bearish price. That means price is really telling you that yes, I want to go lower and reach for that area to the downside. Then we got one more push up. That's that tap of the top of the inversion order block, and then we got a huge reversal candle. That huge reversal candle alone was enough for me to say that yeah, I'm looking to go lower. Even this candle here, so we got a tap of that 50% area, and then price closed outside of the inversion block. That alone was enough for me to say that yeah, price wants to move lower. Then we got another kick higher, and then price closed below the inversion order block again. Then we got that final kick to the downside. Moving over to lower time frames, this is the 5-minute, the juicy parts. So as you can see here, I've labeled it the USD news release. So that was the CPI news release. Price kicked higher with a huge green candle. I feel like this was used to trap traders. So any trader that sees that would think, okay, we're breaking above this high. Some traders will want to go long and then start adding buy positions. And at the same time, traders that have possibly gone short here or sold here at an earlier time, and they've put their stop losses above here, price has kicked all of them out. And it's also trapping traders that want to buy here and they put their stop losses below here. Then after the news release, it sent price lower again to the downside. So all of that there, it's just here. So it's all accumulation of orders. That's why I say during CPI news, you sit out. It's better to sit on your hands, man. Prices whipping up and down, up and down, up and down, just accumulating orders. We've got that move higher, swept all the buy stops that were accumulated above here, and then pushed down lower to the downside, taking out all the sell stop areas, sell stop orders that were accumulated down there. Then we've got to push back into this range that was formed. I'm going to go down on a lower time frame and show you what this blue box is here. So we've got to push back into there. Price then moved lower, forming another inverse fair value gap, which was formed at 8:50 during an important macro time, which means that this inverse fair value gap was very significant. And then yeah, we've got a retest of that, and then price pushed lower. I entered pretty late in this trade. I'll put a little screenshot in the corner over here as proof that I really did take this trade on MetaTrader. So yeah, you can see that there in the corner. So yeah, I entered this trade late because I was at work. I was at work today, so I didn't really have time to enter around here. So that got to me a bit, but it is what it is, man. There'll be other setups. I'd rather take what I can and then just move on to the next one. But yeah, so yeah, after that test of the 850 macro inverse fair value gap, then I took my sell position here, and then yeah, as price was going lower, I was taking partial profits off as well. Because remember, man, as a trader, you got to pay yourself, man. Because who knows? I've taken a sell position here. Imagine holding without taking any partials, and the price goes back up and takes me out. I would have been fuming. Man. But yeah. So yeah, that blue box here, that blue box that I said was up here, is basically another inversion fair value gap, but that was formed during the CPI news release. So the actual release at 8:30 formed this huge candle to the upside. So if I zoom in, that huge candle that was formed to the upside, so it formed this huge fair value gap. So that alone is very significant as well. As you can see, price traded back up into that inversion fair value gap, which is in line. The midpoint of that inversion fair value gap is in line with the 0.25% of the inversion order block on the daily time frame, the quadrant, the 25% quadrant, and then that sent price lower to the downside. Price then went into the 850 macro inverse fair value gap, which is also significant because it's during the macro timing. So the macro time is from 8:50 to 9:10. So that inverse fair value gap was formed during the macro, and then price retraced back into that, took out an old high, displaced lower. So CISD is a change in the state of delivery. So I've got a sweep of an old high, then an order block formed, which forms the change in the state of delivery, which I would have taken my sell position here. But like I said, I was at work, and then yeah, I entered my position there, and then yeah, price just rolled over to the downside. So yeah, man, that was my trade for today. I'm gonna do more breakdowns of trades that I take throughout the year, or throughout the rest of the year. So yeah, hopefully that video helps a few people on what I see throughout the day. But yeah, man, a lot of the terms that I used in that video, I'm gonna still put out lessons as well to help people, kind of thing, to help people understand more on how these things work. So yeah, hopefully that video was insightful and that. And yeah, man, that's that for today, and then I'll probably do a weekly, a midweek review tomorrow instead of today, since it's Wednesday. And then yeah, man, I'll get back to you lot. I'll get back to you lot tomorrow.